Welcome back to the second half of the Futures Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Futures still kind of hovering around unchanged, slightly lower here right now, suggesting markets remain a bit adrift as we head into this Tuesday morning. Let's bring in Scott Bauer, CEO of Prosper Trading Academy, joining us to talk commodities. Scott, welcome. Good to have you with us this Tuesday.
Good morning, Ben.
Good morning. I want to start with crude at 73 to begin the week. What's it telling us?
It's telling us there's a little bit of optimism here on two fronts. A, possibly China reopening, and B, that maybe the banking crisis that we've seen, that's put pressure on commodities over the last week or two is I don't want to say behind us, but it's not as bad as thought. So I think you look at those two things. I know there are some supply disruptions coming out of Iraq as well, but I think it's really those two main points of China reopening, which is always a story, Ben, and every day, every week, we get something different out of, potential China demand. But then again, I think it really has more to do with the overall climate of what's happening here with the banking sector and the relief that, okay, maybe the worst is behind us.
I want to talk about those supply disruptions in terms of Iraq, but let's stick with the demand side of things for right now, because we were, again, talking about the banks a minute ago, and actually our last guest just raised the point about China. As I look at the 50-day moving average and how we're holding below it, it's at 76. We're just below 73 right now. I mean, it does seem like, in terms of the bulls, that we're really looking for that China trade to develop and provide that lift for crude oil. They just didn't get what they were expecting.
Not at all. And we've spoken about this, that range that has been set in for quite some time right here. It did break down below the bottom end of that range, but bounced right back. That range is held. And no, the bulls didn't get what they wanted to see, maybe eclipsing 80 into the mid 80s or so. So again, the information we get out of China is so fluid and it changes all of the time that I'm not so sure that I would trade on that narrative. If you're going to be trading in crude futures based on what the China reopening is, what the demand outlook might be coming out of China, I don't think that that's a wise thing to do.
Scott, can we look to crude right now to get a feel for, recession concerns, fears about Fed tightening, ultimately the banks, and some of these slower growth forecasts that we're hearing about?
I think it's a little difficult, Ben, to be quite honest, to pin any one commodity or any one asset class on the overall climate of the marketplace, because things are so fluid. We're in this environment here that at any one point, one headline here can really tip the scales of the overall market, maybe moving in a 2-3% range. So I don't think we can really look to crude here. I do think, though, that again, that range that we have been seeing, 70, 78 maybe, and I know we broke down below 70 there. That is a very, very tradable range.
Scott, you mentioned the supply side, the disruption we're hearing about to begin the week. It looks like Iraqi, the Kurdistan regions, that oil output ultimately coming into the concern is where that stems from. Turkey halting the pipeline exports?
Yes, that's exactly right. And I don't know the exact amount of the effect on the daily production that we might see out of there, but that is headline news, that is headline risk, and anytime you see something like that, it typically will give a little tailwind to the crude market.
Looks like about 450,000 barrels per day, so maybe a drop in the bucket here. But I think, again, I agree with you with the headline. It seemed to provide a big crude up 3% yesterday. The dollar fractionally lower, so tough to kind of tie it to that. But let's keep with the inflation narrative here ultimately, because I've been driving around. I keep talking about it on the show. Price at the pump, I mean, they're inching the way back up, solidly around that $4 level again here. And in some areas, I'm seeing $4.50 in some instances.
It's awful. And I made some comments about a week and a half ago or so when we saw crude really take a dive and hit, mid to higher 60s, but you don't see it at the pump. And I know it's not a direct correlation, but it certainly seems like the pressure at the pump are for higher prices. We know we're coming into higher driving season coming up here, especially here in the Midwest. We've had such a mild winter and drivers are out there again. I mean, you're out there all the time. I mean, there's just traffic everywhere. So, I think we are going to see higher prices at the pump, and that $4 handle, unfortunately, seems to me like it's right around the corner.
Well, Scott, you were mentioning the breakdown that we saw below the $70 level, the consolidation area. We'll call it 83 to 70 that we were in basically since middle of November. Here you can see the high conviction trade to the downside as crude took out 65 briefly to 64.36, right back to that area of prior support right now. Does it become current resistance? But, as I think about it, I'm reminded of how, look, RBOB gasoline futures never broke down to the same extent that we saw.
Didn't.
And so, again, maybe that would speak to some of the price at the pump. We know labor conditions remain very tight, so that's going to keep these markets somewhat supported as well. Let's move on here. Let's talk a little bit about, one could argue copper, a similar situation in terms of getting a feel for economic well-being or lack thereof. China also as well feeds into that narrative. Is that what you're looking at when it comes to industrial metals, how the economy here is in the U.S. and then globally as well? Is that the narrative?
I think that's a better commodity to look at,
Okay.
just globally and overall to get a picture of world economies and are we out, are we heading into recession? Is there growth out there? So I think when you do look at China recovery, especially, you do have to go to the copper markets here. And, that has always been kind of the go-to standard. And I think that is much more relevant than just looking at these price fluctuations in crude.
Scott, we've been talking a lot about markets that are in the middle of the range that they've been in over the longer term trade, right? You've got the S&Ps. I keep harping on 4,300, the August highs from last year, the October lows 35. We're here at 4,000 for the most part in the middle of the range. As I look at copper in the middle of the range here, $5 down to $3, parked at $4. One could argue rates. Yep. And that leads me to my next thought. Gold is the one where we've really seen some conviction recently. You've got a pretty well-defined range. Saw the run up into the pandemic, the August 2020 highs it was right around that 2100 level, and since then above 1600 and recently working its way towards that upper extreme here, but still range bound here. These are markets that are waiting for more information, it seems like.
There's no question, Ben, and there are plenty of markets across the board where we're going to get a breakout. I wish I knew which way it is, but as you say, we're in the middle of these ranges on so many different asset classes. But when you speak to gold here, it looks to me that obviously over the last couple of weeks with the whole banking crisis, that was a flight to safety. There's no question about that. And we hadn't seen that in the gold market in quite some time where people actually just said, all right, this is, the old safe play here. This is where I have to go. So, I don't know if that is going to abate a little bit as hopefully the banking crisis kind of settles down a little bit. But you're right. I think right now you've got to be in gold on any pullback. At least that's the trajectory right now. I'm not saying we're getting back up to those highs of 2,100 or so, but I think this is the environment that you want to be a gold buy on any pullback.
Scott, quick thought before we let you get out of here. We had a couple numbers here drop at the bottom of the hour. Maybe not the most closely watched in terms of market movers here. We got retail inventories, wholesale inventories, international trade in goods. What are you looking at here today as we await some of the housing numbers still out? We've got Bauer on Capitol Hill, consumer confidence in the Richmond Fed.
Yeah, I was going to mention Bauer on Capitol Hill,
okay.
And I think those notes are going to be out either later today or tomorrow. And, I don't expect much of him, him to say anything different than what we're hearing out of Yellen and everybody else, that the system is safe. However, I think that, all eyes are going to be tuned and all ears are going to be tuned to what he has to say. Not, as you said, many big economic reports at the moment right now. So what do we focus on? Well, focus on the Fed, focus on what Bauer says about the banking crisis, and then hopefully get on to the next part of what the market does. And we've got earnings back ramping up again just a couple weeks away.
Yeah, Kevin mentioned that at the top of the show. We just had wholesale inventories, retail inventories coming in a little bit higher than expected, and as well as the international trade data out. Scott, appreciate you joining us here, talking commodities with us here on the TD Ameritrade Network. Scott Bauer, the CEO and
Thank you, Ben.
CEO of Prosper Trading Academy. Now,